I have to start admitting my own mistakes because, number one, I did not forecast that Trump was going to win the election, even that night. And number two, even less, I was forecasting the reaction by the markets because overall, the consensus view was that with the Trump election, the market would have collapsed while Wall Street soared. And for example, the banking industry stock went up 25%, 30%, so did the dollar. So not only I got the election outcome wrong, but I also got the impact of the election very wrong. So again, I was not alone. I believe I draw a big difference between those who were wrong and admit it and those who were wrong and did not admit it. But now there are many questions we have to ask ourselves on Trump election. Many people believe, and in the previous debate, both last night and today, believe that the big cycle of the liberal ruling, the liberal state of the economy that began with Thatcher and Reagan election at the end of the 1970s will come to a change, not to a halt. No one believes we'll go back to protectionism and closed market 1950s or earlier, but we all tend to believe that at least the globalized capitalism will be somehow corrected. This makes sense, in my opinion, because after the year 2000, with China and the WTO and the complete opening of the market, actually we were able to create a thriving middle class in emerging markets. People estimate 800 million people that soared much above the poverty line, creating a real middle class. But so that in the end, the inequality on a global scale was reduced. But this happened to the expense of our own middle class, which is now suffering. And what Trump did was to represent this middle class, to understand there was a lack of representation on these frustrated male white people, actually interpreted their own bad situation or difficult situation and won the election accordingly. So the big questions that we are facing now as economists, I will stick, of course, strictly to the economy, is the following. Will growth increase or decrease in this part of the world? We don't know. In principle, the economic theory, Ricardo style, on the gains from trade would tell you that it will be diminished. But there is also the other effect of stimulus, public work, etc., that could keep up the rate of growth. Secondly, how will the market develop? Equity market, I believe in our markets could go up as they are at the moment. Bond market, the price of bond could go down and the interest rate, at least in the long run, could finally go up. Inequality here, again, I would expect globally inequality to raise, but locally, meaning in the West, inequality to be probably reduced if we are able to repatriate some jobs. So these are questions that are very general and very difficult to understand. More importantly, do we believe that uncertainty will be reduced? Because if you talk to Larry Summers, for example, or to the theorists of the secular stagnation, they would tell you that secular stagnation depends on uncertainty. So people save too much because they are uncertain. People invest too little because they are uncertain. Will uncertainty be reduced or increased? I don't have an answer, of course. Secondly, and this is more for political scientists than for me, but would some degree of protectionism, maybe even endogenous protectionism, would it reduce the impact on globalization on democracy? Because, for example, Danny Roderick's theory is that democracy is jeopardized by the pressure from globalization. So if the pressure of globalization is reduced, will it, we will be more free, for example, to correct inequality and other things. Finally, there are a set of more specific questions, such as the impact on energy market. We have the privilege of having Emma Marcegaglia, who in the program appears as president of Lewis, which is true, but she also happens to be president of the Italian oil company, which is one of the big 7 remaining oil companies, so you should know a little bit about that. I stop here. I introduce the speaker. We have Eric Jones, who's the director of European and Eurasian Studies at the Johns Hopkins, where I taught myself, by the way, when I was younger. Emma, Louis and E&I, Walter Russell Mead, Bard College, New York, and Jacek Rostowski, who is professor of economics in Budapest and was finance minister. So I would propose, if you agree, to speak pretty briefly, say 7 minutes to 10, it doesn't really matter, to leave space for questions, Q&A session, and then close the session by 6 o'clock. So we go in the order, and we start with Eric Jones.
Thank you very much. It's a great honor and privilege to be here. And as an American, I have to say, the way you study America is much more attractive than the way we study America. Domenico, I have to correct something you said at the outset. You weren't wrong. You were right. You were right for about 3 hours. And if you were in the market in the 3 hours that it took for market participants to distill an economic program from the ocean of tweets that Donald Trump has made, then you would have seen the dollar crash, equity futures plummeted. We thought there was going to be disaster. But once they figured out an economic program, then they began to believe that they might actually be able to make money off of it. I'm not going to talk so much about that, but I am going to talk about what that economic program means for Europe. And I'm going to do that in 5 points related to trade, tax, finance, macroeconomics, and emerging markets. And it's just going to be headlines. My colleagues, I'm sure, will fill in the gaps much more effectively than I. Let's talk about trade. What we will see with this administration is the end of aggressive or ambitious beyond the border trade negotiations. Trade is going to retreat back to issues at the border, tariffs and quotas. There seems to be no desire for regulatory cooperation or regulatory convergence from this new administration. I could be wrong on that. But if that's true, that will represent a fundamental change in the structure of the transatlantic economy as it was imagined by the high-level working group on jobs and growth. And it will mean the end of the transatlantic trade and investment partnership, which will cost Europe some low-hanging fruit in terms of growth and employment looking to the future. On tax, we should expect, as Frank announced, this administration to create incentives for U.S. multinational corporations to repatriate their earnings abroad. There is a mountain of money that U.S. multinationals have kept abroad, and with a lower tax rate and probably an extraterritorial application of that rate, that money will come home. The implication for Europe is that Europe will be less necessary and less attractive as a place for large U.S. multinational corporations to try to hide their income. You will see fewer problems like the one that we had in Ireland with Apple, and it will be much more competitive environment from one country to the next as European countries try to attract investment both across Europe and across the Atlantic. I think the recent moves by Hungary to lower its corporate tax rate down to single digits is probably indicative of where the trend will go. In terms of finance, the new Secretary of the Treasury is likely to lead a drive to weaken the financial protections that were introduced after or in the aftermath, immediate aftermath of the Great Recession. We're going to find a looser regulatory environment, and the restriction on proprietary trading by the large banks is probably going to be one of the first things to go. As a consequence of which, we should expect banks to be much more profitable, which is why the huge bidding up of share prices in the financial services industry, but we should also expect them to be riskier than they were meant to be. The lesson learned from the crisis will have been forgotten in that respect. But it's good that we have such intelligent bankers to ensure that we won't face any problems going forward. In terms of macroeconomics, I think what we're going to find is increasing pressure on interest rates to rise. That will come as a function of the growing economy in the United States, but also the booming stock market. As interest rates rise, the dollar will strengthen apace, and for Europe, that means that there will be a net tightening in many respects. Right now, Europe, or the Eurozone, is running a current account surplus roughly 3 to 3.5% of gross domestic product. I expect that to increase, and as the goods flow across the Atlantic, European capital will be flowing with it. And one has to wonder whether that capital will be safe in American asset markets, or whether we'll be resetting the machine that led us to the last disaster. The fifth and final point is about where risk has gone. The United States is a net provider of security for the world as a whole. I expect that role to diminish, as a consequence of which we should expect risk to emerge, primarily in emerging markets, where the United States is no longer freely providing security at the same level. We can already see the financial implications of that. It's a mirror also of the attractiveness of bringing money back home. So if you were to look at countries like Indonesia and Malaysia, you will have seen that from the time Trump was elected, capital has flown out of those countries and headed back to the United States. This will strengthen the dollar even further, but it will put brakes on the growth of those emerging market economies, and one has to wonder what the implications of that will be. But those are the 5 things that I think we should focus our attention on, and the net impact on Europe, I believe, is going to be to lower trend growth potential at a time when Europe really needs to grow more than ever. Thank you very much.
Thank you. One final question. How do you see the development of technology? Because the Silicon Valley seems to be one of the big losers in this situation.
It's an interesting comment that you made about uncertainty, and Larry Summers. I mean, the classic work, Frank Knight's work on risk, uncertainty, and profit actually identifies uncertainty as the key to profit and innovation. And so I suspect that we'll see lots of innovation in ways that we don't expect. What will be challenging will be those large firms that try to innovate in an incremental manner, because I think that they're going to be distracted from their usual activities for the reasons that you suggest.
Thank you very much. Emma.
Yes. Well, thank you very much for inviting me. I will try to say something from the European business perspective, of course. So what I see is the following. There are some concern. Mainly, there is a lot of uncertainty. Nobody knows exactly what Trump will do. Honestly, because you forgot to say I'm also the president of Business Europe, the European Federation. Yes. No, I'm saying this because last week, no, of course, no. I want to say this because last week we had a meeting with all the representatives of the European Business Federation, and the idea is that there is concern, uncertainty doesn't help, but there is also the feeling that probably Trump will do something different from what he has said during the campaign. So there is also an hope that after a very bad campaign, he will act in a different way. Of course, I listened very carefully and with a lot of interest to the previous panel. Just I want to add something on my perspective of why he won. yes, there is this very interesting thing about vitocracy. I like it very much. And, it was a little bit incredible for me because it seems that professors talk about Italy while you were talking about US. So this idea of vitocracy is interesting. Inequality, this group of interest that seems to have conquered the American policy. But I also will add that Trump is a movie star. He was very famous. He was on the TV. Everybody knew him and know him. He worked a lot on internet. So there was also this part of the fact that helped a lot. And on my perspective, I think he understood that there was a political place, because after 30 years of liberalization and globalization, there was a political space of something different. And he understood that there was a place, and he jumped in it. And being a famous person, because everybody knows him also from a TV point of view, he jumped that, and so he could took a lot of vote. So, and it's interesting also, we discuss as Business Federation of Industry also from the fact that in his campaign and also the campaign for Brexit, both of the campaign were looking at the past. Let's make America great again. Let's take back our power, our control. So it were two campaigns saying the future is what we see is not good. Let's see what was there in the past. Okay, so this was one first thing. Then let's see and what can happen on investment, both on the impact in the US and in Europe. Well, first of all, I want also to say that for what I understand, maybe Anthony then can say it better, for what I understand, up to now, the US business is not very unhappy, at least up to now. Then of course, they will try to understand what happened. On investment, I totally agree on the fact that if he's able to really do this plan of infrastructure, this could be useful. I mean, US needs a lot of infrastructure, and this can help also inequality and people, working class that vote for him. The fact that the Congress is with him can help. So I believe that this investment plan in infrastructure could be there, and this can help the economy. And maybe this can also at least raise a discussion also in Europe about investment, because we need more investment, and with the views that we have, investment is lagging behind. We have a huge gap of investment, and we are still 15% or 20% in stock of investment below what we had in 2009. So I hope that if it goes on with a real investment plan in US, this can also bring some more attention to the need to investment also in Europe. And this is something I wanted to tell. The second thing on energy. My opinion is that I don't think it will destroy all what has been done on COP21. Probably he is a little bit skeptical on that. There are other people who are skeptical. But in my opinion, it will not destroy everything. A lot of investment are already there, already started. The renewables investment are very important also in the US. So probably it will put some obstacle, will not go so far to a very strong path of decarbonization in the US, but I don't think this will stop, because it's, in my opinion, it's almost impossible. So it will go on. Of course, shale will be there. The shale people will have a lot of space on that, but as I said, I don't think that the decarbonization path will disappear completely. On tax and repatriation of profits, also this, I think, could be interesting and good. We were discussing with Minister Tremonti about the fact that something similar were also proposed by him maybe more than 10 years ago. Also this can, if there is a lowering tax process on US companies, this can help the economy, and also this maybe could help also the discussion in Europe. On trade, well, we have to say clearly that already in Europe we have some ideological problem with trade. We risk not to have the CETA, the free trade agreement with Canada, which in my opinion is one of the best trade agreements ever signed by Europe, in big risk because of the Wallonian parliament, which is crazy. So already in Europe we have some problem. So I think we have to think about trade in a different way. Professor Fabrini said this. My opinion is that probably when we talk about FTA, we should also consider new aspect and new chapter in the FTA. For example, we should also consider chapter of environmental aspects, of human rights aspects. So probably we have to go towards FTA which are closer to the needs of people, and this can help also to have a better acceptance from the public opinion on this. But I hope, this is my fear, I hope that on this point the Trump administration will not really close the market, because this will be very bad for US at first, and will be very bad for the world economy. So maybe we need fair trade, we need, as I said, different and more comprehensive free trade agreement, but I really hope, and probably I really hope, and that we will not see a real closing of the market, because this will be very detrimental for the world economy. But we need to think in a different way also on this. On this equality, of course, the problem is there. Also, in this discussion that we had, as I said, at the European Federation of Industry level, we also thought that this problem of disequality has to be faced and assessed and taken into consideration also from business people. This is something that we have to consider. Of course, the real thing is to consider that, to face that, but that at the end to have the right solution, because we don't have to say, okay, the disequality is there, but we need nationalism, we need to close the market to solve the problem. We need to say, we need to keep the market open, keep the mind open. Probably, in my opinion, we need to address policy where you give more opportunities to people. Probably we need to have much and better investment on education. We need to really give more opportunity to everybody. But this problem of inequality has to be faced by everybody. So the last point I want to raise, which has already been raised by Professor Fabrini, is, which is, in my opinion, the real problem. Will the US anyway remain the champion of liberal culture in the world? Because this is important. Or will he quit to do that and maybe care only about his own problems, as we said? If this is the case, I think this is a problem. This is a big problem also for Europe, because as Professor Fabrini remember, Europe is also in a difficult situation. Europe is still working in building a governance which is not there anymore. I mean, we have done some things, but we still need to do a lot of things. So we need a strong US. We need a strong US that remain the liberal voice in the world. If this is not there, probably Europe has to take more responsibility on that. I'm not sure we are ready. We have a lot of troubles. We have a lot of election in the next years. We have a lot of referendums, and so this could be a big problem. So I hope that the US will stay, a real champion of this culture, and if this will not happen, I think we will have some problem. But anyway, at the end, Europe must take more responsibility, and this has to happen anyway. Thank you.
Grazie moltissimo, thank you very much. Now we have Walter Russell Mead. One question for him, if I may. Do you see a sort of remake of a Reagan Republican administration, domestically confined perhaps, but lower taxes, higher freedom, etc., or do you expect something completely new?
It's a very good question, and I thought the best way I could use our time together would be to try to envision what the Trump economic program may look like, because that, I think, is the real question for us, and we'll understand the consequences by whether or not it succeeds and how it's shaped. I think we're beginning to see some signs. I spoke yesterday at another event about part of it. I'll begin with that briefly, and that is energy. For Trump, promoting the production of energy in the United States will seem like a centerpiece of both his economic and his political program. The United States has a lot of unconventional hydrocarbon and shale and other reserves. Pushing this will excite the Republican base who like energy. It's likely it'll create a pretty fair number of well-paid, blue-collar jobs for the kinds of people who voted for Trump. Cheap energy will make everybody who has a car happy, and is likely to also sort of raise economic levels in Republican voting states like Wyoming, Colorado, and so on. So energy checks so many boxes for Trump. I think we have to expect that he will make this a priority. Pipelines, refineries, everything he can do along this line. And there's a sort of an industrial policy aspect to it as well that will appeal to his economic nationalism. We say that energy is fungible and it's a global market, and to a large extent this is true, but actually natural gas becomes more expensive if it has to be liquefied and shipped overseas and so on. And in the U.S., this won't be necessary with a large pipeline network and a lot of production. Therefore, particularly for large energy-intensive manufacturing processes, the United States can become a very attractive place. And this may cause particular difficulties, by the way, for some companies in Europe. But from Trump's point of view, those are exactly the kinds of companies and investments he would like to see. So we have to look at energy. The second point has been talked about by other commentators. That is the question of taxes. Clearly, Trump is going to try to promote inward investment into the United States, both by repatriating capital that is now overseas and trying to enhance the attractiveness of the United States as a destination for international capital. His trade policy may be an aspect of this, but I think actually tax policy is an easier lever for him to use legislatively and politically. So I would expect to see a lot of that. So far, I think we're talking in a fairly Reaganite way. The next area, and this may be more important in U.S. politics than either of the two, although in some ways it's related to them, will be, I think Trump is likely to try to promote what we could call a third great wave of suburbanization in the United States. That is, if you think about what Dwight Eisenhower tried to do in his administration, he built the interstate highway system, which encouraged the development of suburbs outside the city centers. And that plus financial legislation, the development of Fannie Mae and so on, allowed millions of Americans to build single-family houses. To some degree, you can say in American politics that the Democrats are the party of apartments and mass transit, and Republicans are the party of cars and single-family houses. And Republicans tend to promote this kind of suburbanization, while Democrats often deplore it for environmental reasons, for land use reasons, and even to some degree for reasons of social cohesion. Trump is likely to see this as a terrific opportunity for him to promote the third ring of suburbs. The first we had under Eisenhower, the second really come under Reagan, where again, interest rates drop, energy becomes cheap in the 80s after the difficult times of the 1970s, and a lot of the optimism of the Reagan era came from the baby boomers being able to afford houses in the suburbs, which creates jobs, it creates a sense of well-being, and for most Americans, their house is their single most important source of wealth, their largest asset. So I think we would have to expect a Trump administration to promote for the millennial generation, which, like the baby boom generation, is a very large generation, home building for them. Now this will have to be farther out from the city centers than either the first or the second suburban rings, because land has become expensive closer in. And that you would say, well, long commutes, this would be difficult. But with the internet and with the advent perhaps of driverless cars in the next few years, in fact, it will be possible to have a much more dispersed urban area. Houses that are farther from the city center are not such a disadvantage if you only have to commute a couple of times a week because you are doing telework, or because you have a driverless car, you can actually work in the car. It becomes part of your working day. So if that's the case, and he's able to engineer this, then I think what we might well see would be a very large wave of economic growth, because these outer suburbs, they will need highways. Again, democratic infrastructure ideas tend to be for things like high-speed rail from city center to city center. That was Obama's plan for a big push. Republicans, Trump might want to see an outer beltway, an outer ring road, which would run through Republican voting neighborhoods and enrich Republican voting people rather than promoting Democratic interests in the center cities. I think we might also see that the Republican states and the Republican state legislatures will be more eager to embrace suburbanization on this scale, while, say, in California or some other Democratic states, there'll be a strong resistance to this type of development, in which case Trump can say, fine, don't take the money. So this, I think, it makes a lot of political sense, it makes a lot of economic sense, and even from the standpoint of social policy, trying to create jobs and housing for the millennial generation makes a certain amount of sense. I think it also links the interests of Wall Street and big investors with those of ordinary Americans a little bit more, because when you can invest in the municipal bonds, the infrastructure bonds, the mortgage market for a new large wave of suburban construction, you actually provide a way for the financial system to be profitable in ways that are better integrated with the national economy. Now, this is likely, if this is the plan, I think what we'll see is a larger trade deficit, very much in a Reagan way. I don't think Trump cares at all about the fiscal deficit. And I think enough of his policies would tend to promote the dollar, a strong dollar, that just as we saw under Reagan, the fiscal deficits didn't raise interest rates, they didn't create a dollar problem, they actually kind of fed into that Reagan-era expansion. Something like this may well make sense. So that, I think, is where the logic of the Trump administration might take us. Now, whether they'll succeed in getting there, whether external events might derail it, I'm not sure, but I believe this is a program that kind of unites the forces that supported both the Republican Party and his particular candidacy. And if he's able to pull it off, then we may all find that we underestimated him, and I underestimated him as much as anybody else. If it doesn't work, we'll say we were right all along, and it was really a terrible mistake to elect him.
Thank you very much. Very interesting. Well, in a much richer discussion, you answered most of my questions, I must say. My only comment is that if we put together new federal deficit, then private funding of infrastructure, then this suburbanization of America, which I completely missed in the discussion, so very interesting, then we will need a huge amount of new credit, which in a country with little savings creates question marks again. Huge mortgages, etc., because you cannot provide housing to the millennials unless you provide staple finance to it. So it's very, very interesting. Thank you very much again. So Jacek Rostowski, you have the floor. Let us also know what you think about the impact of Trump on your region in particular, over and above what you're going to say anyway.
Well, thank you very much. I have to say that I agree with a lot of what's been said earlier. I think this is definitely going to be, well, no, it's not definitely, we don't know anything, as Francis Fukuyama said. But to the extent to which we can say anything, it seems as if it's going to be, that the intention is very much that it should be son of Reagan. And the question mark over this, and I'll come back to some of the other implications in a minute, the question mark over this is, of course, that it's son of Reagan, but in very, very different circumstances. Reagan came in after the 70s, a period of not only low growth, which we've had, but also high unemployment. We now have one of the lowest unemployment rates in ages and ages. It's below 5%. And to be absolutely frank, I just don't see the scope for increased growth as a result of a fiscal boost, which doesn't mean that there won't be a fiscal boost. There may well be. But I think that it'll run into supply-side constraints, and I think it's going to have one implication which hasn't been thought through, which is that inflation will come back. And it's not going to give very much of an increase in growth for the reason we've just spoken about. A lot of the Democratic economists have been saying, but participation rates are down so much in America, and therefore the unemployment, the real unemployment rate is much higher. But we've heard again and again about what a large proportion of the white working class is in despair and on opiates. Well, that's not something which you come out of over a couple of months or even over a couple of years. So my feeling is that you're actually pretty close to full employment and full employment output. Now then the question is, where is the deficit going to come from? Is it going to come from an infrastructure program, as a lot of people assume and as Trump himself said? So far, the whole infrastructure program is supposed to be financed by the private sector. It's hard to imagine how that can be done if it's supposed to be a road financing infrastructure program. Seems more likely to me that again we'll have son of Reagan in the sense of a large reduction in taxes. And here then the question is, who is the reduction of taxes going to be for? Certainly the initial statements were that it was going to be for those who were particularly well off. Future Secretary of the Treasury Mnuchin has now said it's going to be a reduction for the middle class. Well, this is something we'll see. If it's a reduction for the middle class, it'll be slightly different from this pure son of Reagan approach. But we've got a fiscal boost, almost certainly tax-heavy government expenditure light, certainly a very strong commitment to deregulation of the financial sector and of energy. And the energy deregulation may have some of the positive effects that have been mentioned a few minutes ago. We'll also have probably, looks like we're going to have this dismantling of Obamacare. And what I think we're therefore ending up with is a picture essentially somewhat similar to, in a way similar to Brexit, in that the story that was, the narrative that was sold to American voters, and particularly the white working class American voter, is that their situation can be improved through protectionism, which I'll come back to in a minute, but essentially through tax reductions. Because, as some people have written rather perceptively, those people don't want handouts. They want to either take or feel that they're not being taken from. Now, if that's true, of course, there isn't going to be really a significant reduction in inequality. And that is going to be a problem in 4 years' time of one sort or another. But I think that's what we're going to have. And I think that the present coalition is going to split. Now, before I come on to protectionism in the purely American context, one other thing, tax reform, bringing the 1.2 trillion or 2 trillion, different figures, back, obviously is going to be another effect another factor that's going to bid the dollar up. And of course, all of this bidding up of the dollar is again not going to help with manufacturing jobs in the United States. Now, as far as the world is concerned, first of all, and this has been said already, the political unpredictability, which is certainly stated by Trump to be one of his modus operandi, is going to have a massively, I think, destabilizing effect on emerging markets. Now, what effect that has then back on the United States is hard to say at the moment, but the political effects will be most strongly felt, I think, in the economic and therefore political effects of the original political unpredictability will be most strongly felt in emerging markets. Somebody mentioned Indonesia and Malaysia. We can also point to Turkey, right, where there's been a massive depreciation of the lira, and just over the last few days in Poland as well. So we're seeing, not quite massive, but by European standards, significant. So, and then if we look at the impact on Europe, here it's going to be more balanced. I mean, there's going to be the direct effect of the unpredictability, but it'll be somewhat offset by the deterioration in the United States balance of payments, which could be stabilizing for Europe. Europe, I would disagree with Eric Jones here, does not have a shortage of capital. So even if a lot of capital flows to America, there's just such vast amounts of money on the bank accounts of European corporations that they can certainly finance all the investment that we're likely to see. So this will actually, paradoxically for Europe, be stabilizing. So I would say all the factors working to destabilize emerging markets, political destabilization, destabilizing Europe, but on the other hand, the other aspects of American economic policy stabilizing Europe, increasing growth and employment, quite likely. Now, on protectionism, we don't know, but there have been recent stories about an absolutely hair-raising idea being mooted apparently seriously by congressional Republicans, which is simply to not allow the costs of imports as a cost in calculating corporate tax, not allow the costs of imports of goods into the United States as a cost in calculating corporate profits and therefore corporate taxation, taxable profits and therefore corporate taxation, and also not counting revenues of exports as revenue. Now, this would be an absolute nuclear option, nuclear bomb, in terms of the way it would just totally decimate. Well, decimate is not the right number. It would probably be a lot worse than that. Trade flows in and out of the United States. It is apparently seriously put forward by congressional Republicans, and of course we don't know whether that will happen. But as was said in the earlier panel, this is a very ideologically committed party, and we shall see and hold our breath. Thank you.
Thank you very much, Jacek. What I find very interesting is that you argue convincingly that even if you ring-fence and retrench into more protectionist economy, the spillover effects are still huge and maybe even bigger, at least in the transition. Anyway, I thank all the four introducers, and I believe we have the base for a very interesting discussion now. We have 25 minutes to go. I believe it can be very interesting and spicy because we have diverging views on many things. So I expect the floor to intervene. I would also call the previous speakers, if you still have some energies, and the subsequent ones, because what we are saying is also relevant for the previous and subsequent discussion. Gianni Riotta, you got first.
If I may, thank you. I'd like to ask a question to the chairman, Mr. and Professor Siniscalco. In responding to Walter, you said this raises some questions about the credit, because the United States, America have to raise the money to do all this. How will they do that? I'm asking you. Absolutely, yes.
Perfetto. Gloria Bartoli, Lewis University. I have a question for the Business Europe president. We know, not only from theory, that protectionism would be a lose-lose policy for everybody. We know this from history because the great crash of the stock exchange was reabsorbed in 1 year, and the great recession came because the US Congress decided to increase tariffs. So maybe it would be useful for all the actors, private and public, in Europe to start saying that a protectionist hint in the Congress will be immediately responded to with increasing tariffs in Europe. And this will be also the case if they will not respect the environment rules, so trying to get unfair competitivity. So this will get an answer with an increase in tariffs in Europe immediately.
Thank you. My name is Kevin Calomeni. I am a PhD student and I'm working at La Louise, and I'm working on the proliferation of PTAs and EU trade policy. I have also a question for the president of Business Europe. I mean, we see that in the United States and European Union, there is this contradiction within nation states between companies that are able to integrate very well into the global value chains and companies that have more difficulty. And this kind of discrepancy is creating tension within trade association, national and sectoral. So the question that I wanted to ask you is, in terms of FTAs, the way certain provisions are negotiated and also which sector are put forward, from your opinion, which kind of provision should be reinforced in order to solve this tension within trade association? I have also a question for Professor Jones concerning the trade agenda of the Trump administration. I know for TPP that he kind of rejected it. Didn't heard anything about TISA and AGA. And I wonder also concerning, of course, the multilateral negotiation round in WTO. And also, I guess, it's more a rhetorical question, but I guess we are going to see more complaint being filed at the dispute settlement body in WTO against China and other maybe emerging country that could, accumulate kind of long-term complaints. Thank you.
Maybe we answer these 3 questions and then we start again. The question by Gianni is a very interesting one. I remember a very interesting cartoon on the Wall Street Journal where one Chinese says we are the manufacturing of the world. One Indian says, in India, says we are the software house of the world. Then there is an American who enters a branch of a bank and say, I would like to have my 4th mortgage on my house. And the banker say, but who's going to pay for it? And he say, the Chinese. So, because fundamentally, in the business model of the last few years, the capital flew from the surplus country to the deficit countries, and the US was clearly a deficit country because they were saving too little or consuming too much. If this continues to be the situation where the US saves too little, Asia saves too much, and Europe invests too little, we can do without trade globalization, maybe, but we cannot do without capital globalization. You still need to move the capital from here to there. Otherwise, sooner rather than later, we might be constrained by capital. Paradoxically, in the US, which is the biggest country, I believe that there is a big need by the surplus country to invest their money somewhere and get returns to pay for the pensions, to serve the debt, etc. So I continue to see the globalization of capital in the future, at least. I stop here because on the other questions, I'm not particularly good in answering, so I'll leave you the privilege.
Well, on protectionism, I totally agree with you. It's very clear that if the Trump administration will decide to go for a real protectionist attitude, I mean, what has been said before, the idea of having on the balance sheet this kind of thing it's a real nuclear bomb. So I hope this will not happen. If it happens, as you said, we should react very strongly. Honestly speaking, as Business Europe, we are advocate very clearly and very strongly that free trade must stay there. And kind of, this attitude of protectionism will need reaction, very strong reaction. So, yes, I think you're right in saying that if they will go for that, we will have to react, have to do that. But honestly, I hope, I know, Trump is a very controversial man, but I really hope that at the end he will understand that doing something like that will also destroy US, because it's very clear that I saw some picture, probably you saw the same, when you see an import coming from China of the iPhone, you see that if you look at what is the iPhone, there is at least 60% of this coming from Germany, US, other country of Europe. So when you see an export from China to the US, you're not talking about that. You're talking about export, some internal production of the US, Germany, and whatever. So the world is completely interlinked and interconnected. So I don't think this is possible. So if they will do something like that, we will have to react very, very, very strongly. So that's very clear to me. And excuse me, I didn't understand exactly what you said. You're talking about companies who are only in the internal market and companies who are exporting. I didn't.
For example, a company in Lombardia, there was a study from Alosso Lombardia very recently, and they show how, for example, in the study of 650 companies, some were very well integrated, in terms of exported part of the production, in terms of services and so on. It's the kind of, but some other are more family-owned and family-managed, and they tend to export less or to be less integrated. So
Yes.
it's more about this tension.
Yes, so yes, of course, when you talk about, you know, the world of business, we have, as you said, completely different companies. Some, as you said, are really part of the world value chain. Others are more selling only on the internal market. So, of course, you have different needs. But I have to tell you that both in Confindustria or in Business Europe, this focus on free trade is very clear. Then, of course, there are some companies who are more willing to, you know, take advantage of free trade, some are not. But honestly, also, you know, for example, when you talk about TTIP, you also made pose a question on that. You know, there was in the, you know, in the public opinion this idea that TTIP will be very useful for big multinationals. Now, this is not true, as you know, because big multinationals already can invest in the US, in Europe, they don't have any problem. The real value added of this kind of FTA is for small, medium enterprise, maybe not that today are not able or cannot afford to have two different products, because now with all the, you know, different standards that you have between US and Europe, you need to have two different products, one for the US and the other for Europe. So I think that also this kind of company that today are not so integrated in the value chain can take big advantage of FTA. So of course there is different feeling, but it's the position of all the business leaders are, we want free trade.
Even if, to be honest, Apple already announced they want to build an iPhone entirely in the US. So, or this guy, Trump yesterday in Indiana, I think it was able to announce they don't externalize 1,000. So, I mean...
It will take a lot of time.
Yeah, it will take. Yeah, and it's not beneficial. It's not beneficial, that's why. Okay, your turn? And then I have 3 questions already for the next round.
No, thanks for your question. On the trade agenda, I should be very clear. This new administration is likely to use quite aggressively the rules that have been established under the WTO system. The people that are advising the Trump team are particularly hawkish toward China, which they view both as a currency manipulator and as having lax regard for intellectual property rights. They are also going to be very aggressive on dealing with dumping. So very standard trade issues will be tackled, I think, aggressively, using the rules of the system to the extent to which they can. The point I was making about the trade agenda, and this speaks directly to the point that Emma Marcegaglia was just making, is that this administration, and we don't know for sure, but this administration shows very little inclination to engage in regulatory coordination or regulatory convergence. If anything, they want to achieve regulatory advantage. In achieving regulatory advantage will mean essentially not doing those things that would make it easier for small and medium enterprises to do business on both sides of the Atlantic without having very different standards and testing involved. And I think that that's what's so problematic. So to the extent to which in 2013, when they announced the Transatlantic Trade and Investment Partnership, the Obama administration and the European Commission of the day pledged to create standards that would set the rules for trade at the global level. That agenda has been abandoned, I would suggest. In this more fragmented market, I think there will be a decisive advantage for large multinational corporations as opposed to small and medium-sized enterprises, with the consequence that we'll get less employment growth out of trade than we would have otherwise. But I yield to Emma Marcegaglia as a better expert on that area.
Okay, I have 4 questions. Federico Romero, Paolo Ciocca, Linda Lanzillotta, and I don't know your name, I'm sorry. So Federico.
Yeah, it seems to me that this attempt at forecasting what the Trump administration will do comes down in almost all of your points to what, in fact, the congressional Republicans will accept or promote or do. And we have understandably focused on Trump, the Trump phenomenon, the Trump administrations, but can we say a bit more about this? I, for instance, have no idea who are the new congressmen and congresswomen elected on the Republican ticket, whether the Tea Party wave has been strengthened or weakened. So if I have to put my money on a bet, I would imagine that the congressional Republicans will go along with kind of Reagan-esque fantasy that you laid out, make America great again, and meanwhile make our party stronger as well. So power trumps ideology, but that might not be the case depending on who's there, and I wonder whether anybody has any better information about the outlook of the congressional Republicans.
Dialectics, in a sense. Paolo Ciocca.
Thank you. Quick question on trade. On trade and corporation tax. Applying corporation tax in a non-neutral manner between import and export equates either to, I would say, either to a tariff or to a tax dump. So we will see what this will mean under GATT, I would say. But that's the comment. The question is to Eric Jones, and you said about, point taken about the less likely attention to regulatory convergence or regulatory, you said, coordination. Do you think this would apply also to, let's say, those sectors in which it is a primary US interest to have regulation, say, for example, new technology or cybersecurity? Thank you.
Thank you. I didn't hear anything about the possible impact of new relationships within United States and Russia, and which impact on Europe, both in terms of trade and sanctions, and as well as from the energetic point of view. Thank you.
Interesting, thank you. Cecile, is your name?
Yes, this is Dr. Tehseen Nassar from Lewis University. I have a question for Dr. Walter and the second question for Eric Jones. My question to you, Dr. Walter, is that how do you see the future of the US foreign direct investment amidst a wave of localization? For example, when you talk about McDonaldization and Coca-Colaization, you also talk about the domestic industry. For example, I come from a country like Pakistan. In Pakistan, the domestic industry is becoming slowly and gradually quite robust. So how do you see the future of the US foreign direct investment in a country like Pakistan, for example? Then the question to Dr. Eric is, how do you see the EU import tariffs when it comes to a trade regime, especially also concerning with countries, developing countries like Pakistan, for example? We have seen that there is a very robust fishing industry in Pakistan, and EU has been very active when it comes to bilateral trade. So how does the EU market correspond to developing markets like that of Pakistan and other markets as such? These are the questions that concern me. Thank you very much.
Thank you very much. We have 10 minutes to go, so I give the floor to the panel, maybe in reverse order. Jacek, you go first.
With pleasure. Thank you. So maybe I'll start with the Ryan versus Trump question. Somebody once, an old professor of mine said that, Peter Wiles, that a Russian chinovnik was, in other words, imperial civil servant, was a narodnik who built railways and made war. And by analogy, I would say that Trump will be, and of course it's a guess, will be a Reaganite who maintains Medicare and Social Security. But the rest will be Reagan. And I don't think that there is going to be that much of a conflict between Trump and Ryan. He's just going to walk away from the conflict as long as he just protects the essential direct acquis of the white working class in Medicare and Social Security. On Russia, there may be a move away from the sanctions. That obviously will encourage the aggressiveness of the Putin regime, and that will, of course, destabilize or tend to destabilize the European Union, first economically, and then, of course, also politically. But the other side of the policy, which was mentioned earlier on, is the big push for energy liberalization. And of course, if that increases energy production in the United States, that's going to be very bad for Russia. And although sanctions, I believe, have been very useful because they've expressed European solidarity and have been a terrible shock to the Putin regime, the pain that they've inflicted on the Russian regime has been significant, but much smaller, of course, than the collapse in the oil price. So on balance, I'm optimistic.
And this is reassuring. So now we have Walter.
All right, well, on the question of the congressional GOP and Trump, I think when we think about the conservatives in the U.S., we can talk about two different groups. Those of you who know Special Providence would recognize the Jeffersonians were sort of principled small government and principled isolationists in foreign policy. So people like Rand Paul would be a very good example. And then the Jacksonians, who don't believe in sort of promoting democracy or building a global trade order, but believe in attacking the people who are mean to you or who attack you, but also believe in spending a lot of money on Jacksonians, that is to say, middle-class Americans. And Trump is clearly a Jacksonian rather than a Jeffersonian. And Jacksonians are almost always politically much more powerful than Jeffersonians when they clash. Under Obama, a lot of Jacksonians were voting in Congress like Jeffersonians because they didn't want to give Obama any money to spend, because they thought he would spend it on people that they didn't like, who weren't like them, or would do crazy things with it overseas. But when it comes to Trump, they'll be much more willing to spend the money. So I would say there, I think the checkbook will be open, but only for certain purposes. On Russia and Trump, one of the things that I think the world press has gotten most wrong is the likeliness of Putin-Trump friendship. Certainly, Trump has refused to join in with the kind of anti-Putin rhetoric that one hears. But if you actually look at the track record of the people Trump is naming to important positions, they are extremely anti-Russian, including, by the way, General Flynn. If you read his book, he's being portrayed in the press as very pro-Russian because he went to a dinner with Putin and gave an interview on RT. His book has many, many pages about all the ways in which Putin is a bad actor and Russia is a threat to American security. So I think there's a fundamental misreading. General Mathis is also no friend of Putin. And if you look at the names on the lists of other people for Secretary of State and so on, there are no Russia apologists on that list. What I think you do hear from Trump and others is ISIS first, that again, the Jacksonian approach to foreign policy is that the people you really want to deal with hard are the people trying to kill you. And that at the moment would be ISIS. That was Flynn's argument, that the Obama administration wasn't focused enough on ISIS. And there, yes, temporary cooperation with Russia to get rid of ISIS might well be on their agenda, but temporary in the sense that, yes, you worked with Stalin in 1941 against Hitler. That doesn't mean you're pro-Stalin, and it doesn't mean that once Hitler's hash is settled that you won't take another look at Joe Stalin. So this is, and again, I would definitely emphasize that the all-out push for energy production in the U.S., part of this is very much a happy sense that this will make problems for the countries that fund Islamic extremism, and that also will make problems for Putin. They're very much aware of this. It's very much a part of their thinking. It may also be part of why they think they could make a temporary truce with Putin in order to deal with ISIS or other things. Just finally on Pakistan FDI, I don't think these macroeconomic changes would have a terrific impact on the amount of FDI going to particular countries, and capital is sort of so fluid that this is going to be a function of perceived rates of return on investment in Pakistan rather than something else. There is, on energy specifically, U.S. companies have raised the hurdles for what they expect in terms of profitability for investments in perceived risky destinations overseas, because there are so many attractive places to invest in production in the U.S. But that, again, is a question of perceived rates of return versus risk rather than other things.
Thank you so much. Emma?
Well, very fast. Just one point on Russia. I agree with Walter because, you know, we all read this, what he said. Anyway, he said, I want to be closer to Putin and to Russia. So he said that. But if you look at the attitude that normally the Republicans had towards Russia, it's against that. I remember when there were the sanctions, the big push were coming from the Republicans, US. So I agree with you. I don't really expect a lot of love between the two, and probably also there will be also conflict on the energy part. So on this part, there is this, you know, communication, but probably this will not be the real attitude that he will have.
Grazie, Eric.
Well, I had two sets of questions that were addressed to me. One was by Choka, and it was on the new technology and cybersecurity, and whether the administration would engage in regulatory cooperation, coordination, or convergence on those issues. I think that might not be the right lens to look at. I think what they will focus on are standards and intellectual property rights, and they will hope to develop those in the United States and then defend them vigorously. And so I don't think we'll get much regulatory convergence. There were some excellent questions on Pakistan and its relationship with the new administration and with the European Union. I'm going to deflect those to Ambassador Gardner, particularly in light of President-elect Trump's recent conversations with the leader of Pakistan. And so I'm sure that he'll be able to answer those more effectively than I. The one thing I would say, and this is to Federico Romero's question about the showdown that is likely with Congress, I think there will be a showdown. I think it'll be a showdown that will involve the same toxic mix of entitlement reform and the legislative debt ceiling that we have in the United States. And it will be interesting to see whether the Democrats try to bail out Trump and that part of the Republican Party that wants to spend money, because there's a crazy part. It's not very large, but it's large enough to break the majority. There's a crazy part that will hold the rest of the Republican Party hostage.
Right, so it's 6 o'clock, we are right in time. I thank everybody. The beauty of moderating this session is that I don't have any conclusion to draw because the conclusions will be drawn by Giulio in the end. So, and there is no conclusion to draw on that. Let me just say it was very diverse, very informing. I enjoyed it a lot. The only thing I can tell you from my own experience is that executing decisions in the real economy, investment, divestiture, repatriation, is a long process. So don't expect anything change dramatically next year or in 2 years from now, because you have to amortize, repatriate. I mean, it's a long, the big unwinding had it to happen, and I dispute it, but still it's a long process. Thank you very much.